When the market is doing good, we're all happy. We all start to think that we're Warren Buffett, and it feels as if money grows on trees. But when the market suddenly tanks, we're all in a constant state of chaos, and it feels that the earth is about to end. What if I told you that there was a way to ensure that no matter what happens inside the market, you can't lose more than what you put in? You call me crazy, right? Just imagine how crazy that would be. Good news is that you don't have to imagine. We already have something for this called a segregated fund. Built for moments just like this to ensure that you stay calm and resilient when other people are literally losing their minds. So what is a segregated fund? A segregated fund is an investment vehicle offered by life insurance companies that combines a mutual fund with an insurance protection element on top of it. So this is invested in a professionally managed fund. You are guaranteed your principal if the market tanks, and you are guaranteed your market value if the market performs exceptionally well. Plus, you have access to a whole variety of different options, including estate planning, save on taxes, and creditor protection. So you have two main guarantees in a Seg fund. Number one, maturity guarantee. If you keep the contract up until maturity, you will receive either 75 to 100% of your original principal or the market valuation of your investment, whichever one is higher. And two, death benefit. God forbid, let's say the unthinkable happens and you are no longer with us. Your beneficiary will receive 100% of your original contribution or the market valuation of your investment. Again, whichever one is higher. So let's say you bought stock worth of $50,000 and then 2-3 years down the line it went to $100,000. You can reset your contract. You could have the biggest recession in the history of mankind, and your guarantee isn't at $50,000, it'll be at $100,000 because you reset your contract when your portfolio investment was at $100,000.
So besides the security aspect, what's the difference between this and a mutual fund?
Great question. So in a segregated fund, they allocate your income, meaning your NAV, net asset value, remains consistent. Meanwhile, in mutual fund, they distribute income, which results in your NAV decreasing over time. And plus, you have a whole variety of different options within a segregated fund that you don't have in mutual fund, such as bypassing probate, saving you time, legal fees, and estate taxes, faster payments to beneficiaries, maintain privacy, and protect yourselves from creditors if you named a beneficiary. So for creditor protection, your beneficiary must be a preferred class. So that's your spouse, kids, grandkids, or your parents, and it must not have been done in a way that's for fraudulent purposes. And for this solution, you have something called an MER, Management Expense Ratio, which is allocated for expenses such as investment management fees, fund administrations, legal and regulatory compliance, distribution and dealer compensations, insurance guarantee costs, so that's your maturity and death benefit, reset features, client services, marketing and product development, tax reporting slips, technology infrastructures, and many more. I know what you're thinking. This sounds too good to be true. Where did something like this even start? Alright, so let me take you back to where it all began. After World War II, Canada experienced a massive economic boom. Insurance companies started expanding, and policies started becoming cheaper and cheaper, but investment returns? They were still very minimum. Back then, investing felt very risky and very unpredictable. Canadians wanted safety, but more importantly, we wanted growth. So let's get to the 1970s, a revolution broke out. Insurance companies started creating flexible policies, most famously known today as Universal Life, which is an insurance product mixed with market-based investing. But that wasn't enough. Professionals wanted to take this industry further. So enter the 1990s when big companies like Manulife, Sun Life, and Canada Life created products that allowed investors to grow with the market while protecting their capital with guarantees. Now let's roll to the 2008 global economic crisis. When all others saw their investments fall right into the negatives, Seg fund holders were the only investors who could sleep easy at night knowing that their money was in safe hand. And also note that this is an explicitly Canadian-based solution. You won't find this product in US, UK, France, or any other country. This is explicitly a Canadian-based solution designed based on our values, beliefs, and our financial system. So ladies and gentlemen, there you have it. Whether you're looking to protect your money without fear, protect your family from the unknown, or pass on your wealth efficiently, Segregated Fund is one of the most powerful tools available to Canadians today. And it's been here all along. After all, protecting what you build and planning for the ones that you truly care about, that's just the Canadian way. If this sounds like the kind of peace of mind that you want in your financial plan, please feel free to reach out to us and we'll design a tailored solution based on your current needs and future goals. Thank you guys so much for listening. I'll talk to you soon. Take care. Bye-bye.